What's going on? Welcome back to the channel. So today when I talk to you about Opendoor, I want to go over some expectations for this upcoming week, what might cause some volatility, and what Kaz just mentioned that should really push the stock price higher. So I want to go over all the things that you need to know, but first, make sure to hit that thumbs up, and with that, let's get right to it. So starting off with macro data, on Monday, we don't really have too much. So it's more just a reflection day on everything that has happened over the last several trading days. Tuesday, we have ADP employment, the weekly, also 2 rounds of non-farm payroll, so October and also November's numbers, retail sales, and unemployment. A lot of big data that could really change the broader market's perception of a January cut. Aside from that, we do have a lot of flash data, so composite, manufacturing, and services. Again, 50 is a key pivot. Anything above 50 shows more of an expansion. Anything below 50 shows more of a contraction. Aside from that, on Wednesday, this data will be key to Opendoor. Plus, based on a lot of the comments that Powell mentioned regarding real estate, market's going to be really looking at mortgage applications and mortgage market index quite close, especially for this week. A lot of Fed speakers on the Wednesday. Thursday, dreaded CPI, initial jobless claims, and then Friday, existing home sales and Michigan consumer sentiment. A lot of big stuff coming out. And aside from that, though, these are the companies that are putting out their earnings for this upcoming week. So you do have a couple big names, but nothing really, in my opinion, that's going to significantly impact the broader market. There really isn't anything planned associated to Opendoor this upcoming week, so no interviews, no fireside chats or anything, but Kaz just mentioned something, just a regular tweet, so no official PRs just yet, but he did a tweet that should really push Opendoor significantly higher. So he kind of tweeted this or posted whatever, December 13th at 1:22. So fresh, new information. He did say that yesterday we shipped a change that reduced our costs from running large-scale experiments with multi-year backfills from $2 to $3 million to less than $1,000, and also cutting the process time from 34 hours to 4,000. So I'm sure some people might be wondering, okay, like what the hell does this mean? So this means that they can actually run a lot more experiments. They can kind of backfill and do a lot of their testing at a fraction of the cost and also like a fraction of the time. So they're able to cut a significant amount of costs. They can do a lot more experiments and become ultimately more efficient. So this honestly is huge. And I get it. I've been covering Opendoor for a while. There's been like on and off some good news here and there, some very interesting stuff. Honestly, I can tell you that this right here is exactly the type of news that Wall Street does like. And I get it, there's a lot of fear that's been largely suppressing Opendoor as well as the broader market, but this is very good. The market favors efficiency, and this definitely is that all over it. So let me know your general thoughts on that in the comments below. I absolutely love this. And like I said, that should really push Opendoor significantly higher. As far as shorts going into this upcoming week, 14.01 or 14.1% of the free float is being shorted. Works out to be 110.28 million shares overall are being shorted. Last 3 or 4 videos I've brought up, it has shown signs of naked shorting, so there is more shares being shorted than on loan. So 79.61 million shares on loan, 110 million shares being shorted. So something doesn't really add up. So there is still a lot of sketchiness happening behind the scenes, and most likely anticipate that sketchiness to continue. Although, mind you, shorts have been kind of returning. So short interest was roughly 21% in November, and they've been kind of returning quite a lot since then. So logically, I don't know what their real plan is. Maybe they kind of realized that they were very overextended, or possibly they're just going to be trying to cover just the naked shorting component. But it'd be very interesting to see the next round of FTDs, as I kind of brought up previously. But aside from that, from a bull standpoint, you see a consensus for it to be roughly around 750. And in my opinion, if the data points come in better than anticipated on the Tuesday, Thursday, and Friday, and then also the market digests this tweet as well, I think that it could easily go a lot higher than 750 this week. That's just my opinion, of course. Bears are anticipating for it to be sub 650. 650. And the fact that it closed on Friday at 656, that does mean that there's a hell of a lot more upside than down anticipated. With it closing again at 656, that does mean that the 650 and below strike prices are considered in the money. So you don't really see anything. There was 1,000 at the 650, 715 at the 6. So you're not going to see any gamma squeeze. But let's say Opendoor is able to close above 750 or 8 this upcoming week, then things could get very interesting and you could potentially see a nice little gamma squeeze. Aside from all of that fun stuff, with it at the 656, it is trading between this pivot and this S1. So I'm looking at the 1-day chart. These are very strong support and resistance points. So 585 and then 747. Just to give you, for those of you that want a dollar cost average or kind of day trade, swing trade, just looking at the 4-hour, it is trading right now between these 2 points. So this S2 and this S3. So in comparison to a lot of other growth stocks, has been lagging, and I think arguably what has happened to Opendoor over the last 5 days has been kind of unnecessary. So it went down about 10% just this last week alone. But if you're wanting to dollar cost average swing trade, 637, 671, and 692 will be the next strong support, and 2 rounds of kind of targets. Aside from all of that fun stuff on the actual chart, still kind of stuck between the 10 and also that 100-day moving average. So this upcoming week, most likely, if the data points again come in line with expectations, you could see a push to that 50-day moving average, which conveniently is kind of what the bulls are somewhat anticipating. That 50-day moving average is a very big deal for growth stocks, and especially for Opendoor. Last time it did successfully stay above it was November the 14th, and you can kind of see some of the type of price action that does occur when Opendoor does actually break above it. So for instance, November the 10th, you had some pretty good price action. On October the 23rd, same type of thing. And then prior to that was way back in July. So I think in general, this week is a very good opportunity for Opendoor to really push higher. One thing that could potentially happen, just on a side note, is that we did have Oracle earnings as well as Broadcom on the Wednesday as well as Thursday, and the market kind of freaked out over that. And it's because Broadcom kind of signals some kind of margin issues and whatever else, but potentially with some of these companies putting out their earnings, same type of thing could happen. So anticipate a lot of volatility at the end of the day, but there's a hell of a lot of good opportunity for Opendoor to really move higher. So let me know your thoughts on that in the comments below. One final thing, just for this weekend, I did lower my tier. So if you are looking for a lot of good buy signals on stocks, options, crypto, I put out daily day trades, numerous swing trades. So you can pop over to the stacked account. I just started this roughly around a week and a half ago, and I lowered this down to $5. So if you get in, it is $5 a month and it will not increase. So definitely sign up before this weekend, where it'll go back to that regular price of $22. So definitely sign up for that. Link in the description below and also the comments. With all that said, appreciate all of you watching.